He started with a paper route and a pocket full of ambition. Today, he's one of the richest men in the world and perhaps the most respected investor in history. Warren Buffett, the Oracle of Omaha, built a financial empire not through speculation or flashy tech, but through patience, discipline, and an unwavering belief in value. While markets have panicked, crashed, and rebounded, Buffett has remained the calm center of the storm, a billionaire with a frugal lifestyle and a legendary sense of clarity. So, how did a young boy from Nebraska turn Berkshire Hathaway into a global powerhouse? And what lessons can we all learn from his incredible journey? This is the story of Warren Buffett. Warren Edward Buffett was born on August 30th, 1930 in Omaha, Nebraska. His father, Howard Buffett, was a stockbroker and later a U.S. congressman. Warren showed an early interest in business and numbers. At just 6 years old, he bought 6 packs of Coca-Cola and resold individual bottles for a profit. He celebrated his 10th birthday with a trip to the New York Stock Exchange, and by age 11, he was already hustling, selling chewing gum, Coca-Cola, used golf balls, and magazines door to door. He filed his first tax return at age 14, deducting the cost of his bicycle as an expense. Buffett was obsessed with making money not just for wealth, but for the game of it. He would pore over financial statements for fun and read every book on investing he could. One of Buffett's early setbacks came at age 19 when Harvard Business School rejected him. Devastated at first, he now calls it a lucky twist of fate. Buffett enrolled at Columbia instead, where he got to study under his idol, Benjamin Graham, author of The Intelligent Investor and the father of value investing. Graham's philosophy was simple: buy undervalued companies with strong fundamentals and hold them until the market recognizes their worth. This deeply influenced Buffett. He devoured Graham's book, The Intelligent Investor, and would later call it the best book on investing ever written. Buffett worked briefly for Graham's investment firm, but eventually returned to Omaha to start his own investment partnerships in the 1950s. By 1962, he had made enough to begin a new chapter, acquiring businesses outright. Buffett's most fateful deal began as an act of revenge. In 1964, he was investing in a struggling New England textile mill called Berkshire Hathaway. Initially, it was a typical value play, buying a struggling company below its book value. But after a disagreement with management, Buffett took majority control of Berkshire and promptly fired the man who tried to cheat him. While the textile business ultimately failed, Buffett used the company as a holding vehicle to acquire other businesses. And that was the beginning of something historic. Under Buffett's leadership, Berkshire Hathaway transformed into a diversified business empire. Instead of flipping stocks for quick profits, Buffett focused on buying whole businesses with strong management and consistent earnings. His philosophy was simple: only invest in businesses you understand, run by people you trust, at a fair price. Buffett's approach to investing is now legendary. He avoids trends, speculation, and short-term noise. Instead, he looks for what he calls economic moats, companies with a sustainable competitive advantage. Some of his most iconic investments include: Buffett invested in 1988 and still holds billions in shares today. He believes in products people love and use regularly. While he initially shied away from tech, Buffett eventually bought into Apple, calling it more of a consumer brand than a tech firm. In 1963, a massive fraud known as the salad oil scandal nearly sank American Express. A con artist had duped Amex's warehousing division into lending against tanks of oil that turned out to be mostly water, saddling the company with $60 million in losses. Amex's stock halved as panicked investors fled. Buffett, then in his 30s, smelled opportunity amid the chaos. He did some digging, even staking out restaurants to see if customers still trusted their American Express charge cards and realized the core business's reputation was intact. Conviction galvanizing him, Buffett shoveled 40% of his partnership's capital, about $13 million, into Amex stock. while everyone else was running away. We simply attempted to be fearful when others are greedy and to be greedy only when others are fearful, Buffett later said of such moments. His contrarian gamble paid off spectacularly. Amex's stock recovered and then some, minting millions for Buffett and cementing his mantra of boldly buying when others panic. One of Buffett's closest collaborators is Charlie Munger. In 1959, he met Charlie, a former lawyer with a razor-sharp mind, and it was the beginning of a legendary business bromance. Munger's blunt, skeptical style perfectly counterbalanced Buffett's folksy optimism, and in 1978, Munger became vice chairman of Berkshire Hathaway. For the next 45-plus years, Warren and Charlie became an iconic duo, tag-teaming annual meetings and investment decisions with uncanny synergy. Munger persuaded Buffett to evolve from buying cigar-butt bargains to investing in great businesses, fundamentally shaping Berkshire's destiny. Their partnership only ended with Munger's death in 2023 at the age of 99, marking the end of an era. Buffett has often said that meeting Charlie was one of the best things that ever happened to him, a true melding of minds that transformed both men's lives and business history. Together, they've built a culture of trust, long-term thinking, and intellectual humility, traits rarely found in the financial world. Buffett's life is the ultimate testament to the power of patience and compounding. He earned his first $1,000 as a teenager and $1 million by 32, but the truly staggering wealth came much later. In fact, about 94% of Buffett's $100 billion-plus fortune was earned after he turned 60. This mind-boggling statistic is why Buffett compares building wealth to a snowball gaining its size as it rolls downhill. Start early, build momentum, and let compounding do the rest. By reinvesting his profits decade after decade and rarely selling his winners, Buffett's net worth snowballed to heights that seemed unimaginable in his youth. It's a dramatic illustration that time is the friend of extraordinary success, and why he often says that his favorite holding period is forever. Time is the ultimate luxury. Despite running a $700+ billion empire with thousands of employees, Buffett famously guards his time like a treasure. He spends an estimated 80% of his day reading and thinking. Buffett preaches the power of focus and the freedom to say no. The difference between successful people and really successful people is that really successful people say no to almost everything, he says. He also warns, you've got to keep control of your time, and you can't unless you say no. You can't let people set your agenda. This philosophy has kept Buffett laser-focused on what matters while tuning out distractions. In an age of information overload, Buffett's disciplined less-is-more approach to time management is as legendary as his stock picks, and may be a key reason he's still happily tap-dancing to work in his 90s. Every spring, Buffett transforms his quiet hometown of Omaha into a financial carnival. The Berkshire Hathaway annual shareholder meeting draws over 40,000 devotees from around the globe. They come to hear the Oracle of Omaha hold court in a packed arena for 5 hours of Q&A, dishing out wisdom on investing, business, life, and everything in between. It's not your typical stuffy corporate meeting. It's a folksy spectacle complete with jokes, candid advice, and even humorous skits or songs. Buffett has pledged to give away more than 99% of his wealth. In 2006, he announced he would donate the majority of his fortune to the Bill and Melinda Gates Foundation and other philanthropic organizations. He also co-founded the Giving Pledge with Bill Gates, an initiative encouraging billionaires to commit to giving away at least half of their wealth. His example has reshaped the narrative around wealth and responsibility. He's shown that it's possible to accumulate massive success without sacrificing ethics, humility, or purpose. Buffett, now in his 90s, calls it a great big party and savors the chance to connect with his shareholders en masse. The vibe is celebratory yet bittersweet. Each year might be the last with Buffett at the helm, adding a sense of history in the making to the festivities. It's corporate America's closest equivalent to a rock concert tour finale, starring a nearly 94-year-old rock star of finance. Warren Buffett isn't just an investor. He's a teacher, a role model, and a reminder that success can be built slowly, steadily, and with integrity. From delivering newspapers on the streets of Omaha to steering one of the world's most valuable companies, Buffett's journey is a masterclass in patience, discipline, and vision. And in a world obsessed with fast money, his story stands as proof. The best returns come to those who wait.